Last week, U.S. employers added 266,000 to payroll when 1 million were expected, and it was one of the worst job reports in 23 years. Now, this is the interesting part. With all that bad economic data, we're seeing now the city is launching a crypto service. Did you guys see this? Put yes in chat if you did, and no if you didn't. And the big boys, the big kahunas. Kudos to Mike, who was on the show a couple weeks ago, one of the legacy traders there. Quiz for you really quick. Who are the top 10 traders to come out of Goldman? Goldman is kind of like the Harvard for investors. One of them runs a fund called Appaloosa. But tell me the top 10 traders there that came out of Goldman. But they are now launching a crypto desk, and they're really starting the cryptocurrency trading era. And here's what makes this really interesting. I want you to go to Google real quick and tell me what is the win rate of Goldman Sachs's trading desk. So for those of you who say, hey, I want to trade, I want to speculate, I want to put money into the market without a strategy, without any conviction, without any competitive advantage or edge, look what you're facing and look what you're up against. Goldman Sachs traders made more than $100 million in 14 separate days amid the first quarter's fierce volatility in 2020. For those of you who don't know what that means, 2020 last year was tough, especially the first quarter. Goldman Sachs traders made $100 million on 14 separate occasions. Kudos to that SEAL Team 6 and that amazing trading pod that they have there. So when I tell you guys that you're competing against the best, the brightest, those who have built some of the greatest algorithms, and here's the crazy part. This is their human team. This does not include algorithms. This includes just solely the trading desk of people who are legendary there. So normally they have a 93% win rate on the year, which is insane. An 85% win ratio during the pandemic. So when anyone says they want to trade, trading has considerable risk. Please consult your advisor. If you're not disciplined, please do not do so. Trading is not for you. But for those of you who say, hey, man, I want to trade. Okay. We talked about it last week. I am not your competition, and neither is anyone that you see here. But you have to look at it like this. What are the best in the world doing? Do you have an edge against the best players in the world? If you are a trader, the number one thing you have to think of is the top 5 players in the space. What can you do that they are not able to do? And if they have a 93% win rate, it's going to be tough, but you have to find your edge. 85% during the pandemic. And I know everyone says, hey, trading during the pandemic was easy. It was not. Build your edge first around the best in the world, and then everything else will work itself out. And Mike gave you what the risk parameters were. So if you have not listened to that episode, please go do so. Now, here's the thing that I want to dive into. For months, I've been telling you guys that they are going to come and try and destroy Kathy and her fund because she pulled the curtain back and revealed that 7 to 12% was more than possible in long-term investing after almost a half century or 70 years of saying that that is the baseline. Now, of course, when you average everything out, 7 to 12% is the average for the S&P 500 and all indexes, right? But for those of us that have traded or even invested on our own, we've been able to see that you can get more than that if you have great entries, great patience. You can do a little bit of basic kindergarten math, and you are able to wait for your spots. So Bitcoin and Tesla being in her portfolio was one of our primary strategies. You guys can go look at the clip on CNBC. When she gave her price prediction for what CNBC was going to, what Tesla was going to go a few years ago on CNBC, some of the media personalities laughed her out of the room. And please write this down. Whenever someone has an idea or a thesis or a model of an astronomical gain, even though you may not believe that it's possible because you are projecting your limited beliefs on someone else, please always listen because they may be onto something that you're not. And I know I spelled assassination wrong. So they laughed out of the room. And then after those incredible gains became true last year, a lot of the industry began to feel threatened. So I'm going to ask you this. What if, not only because Bitcoin is the digital gold and Ethereum, and of course, like Bitcoin is kind of like the Dow and Ethereum is like the S&P 500. You can say maybe Ripple or Litecoin is like the Russell 2000. But what if the reason that all of these cryptos are all of a sudden taking off these years and we have all this institutional backing, even though when Jamie Dimon first talked about Bitcoin in 2016, he said he didn't like it, but the European desk began investing in it. And then all of a sudden she comes out and knocks it out of the park. What if all of these cryptocurrencies as a seventh best reason to invest in them came about to destroy her fund? I told you guys, there's surface level thinking that you have to address, and then there's different layers and deeper layers to the game. So if I have a competitive advantage and I say I'm going to invest in this car company and I'm also going to invest in this Chinese asset and pair them together to get exponential rates in comparison to my competition. And even though most people in 2020 did have a good year after fees, they could have been better if they had used her strategy. So now fund managers all around are saying, hey, you can produce higher alpha with less work if you invest in cryptocurrencies, and let's take her head off. So now everyone is having a desk around crypto. So once you look past the surface area, and I always told you guys, same thing with marijuana, there's no need to rush to put your money into it until there's institutional backing heavily. Now there's heavy institutional backing for crypto. I'm telling you, one of the reasons that crypto is taking off like this and taking off like crazy is to destroy her. You notice not as many people are talking about her as much. ARK funds are not doing as well. And that's why I always tell you guys, you have to have your own thesis for how you're going to invest and how you're going to have an edge. You just can't copy off of everyone's paper. We have to end the intellectual incest. Go do your own research. I mean that. For all my business owners and all my investors, please write this down. The ultimate competitive advantage is to have an advantage and never reveal it to the world. When Cramer told her that she needs to stop being on media, and I love Cramer dearly. If it wasn't for Cramer, honestly, I would not be doing this, because he gave the model for this at scale. Was there a pinch of maybe being upset with her? Maybe 2%. But the rest of it is true. It is very hard to be a rock star fund manager, rock star investor, and be a media darling. It's tough. There have been a few that have been able to do it. Buffett, Peter Lynch at one point. But most of the veteran investors are not media darlings. You can argue that the number one fund of all time, most of you don't even know who that is, and that is intentional. Some of the best investors do a great job of being in the shadows. So it's hard to be Diddy, dancing all in the video, and produce great results. So when you have an advantage, and I know sometimes we get so excited that we want to share everything with the world, but the same technology or strategy or idea that you have that can change the world, that will give you a competitive advantage, can be used against you if you give it away. So for all my entrepreneurs and investors, have an advantage, an edge that is yours, and then never reveal it to the world. I have to bring this up again. Mitigation of risk in every transaction is the quickest way to wealth. Everyone, please write this down or screenshot this. Mitigation of risk in every transaction is the quickest way to wealth. Quiz time. If you only risk 1.2% or 1.5% of your entire net worth on any deal, is it very difficult for you to lose all of your wealth and or go out of business? Here's the entire game. Have an incredible target, 50x, 10x, 100x, and risk 1.2 to 1.6 in every transaction. You don't need to win that many, especially if you're looking for 50 to 1 reward to risk. You only need 1 or 2 hits in a lifetime. If you get 10 hits in a lifetime, you are amazing.
My graduates from my school being Forbes, bag drop.
Bag drop.
A mic drop, bag drop.
Bag drop.